Hello, everybody. Weekly tax planning update video time. Hopefully this week I'm able to keep this one under 10 minutes. That's my goal for this week, to be a shorter one. Next week, I'm probably going to do a really good tax planning one, but this week I want to talk about some bookkeeping issues. So I get a lot of questions for people that do their own bookkeeping or hire a third party to do their bookkeeper outside of our firm, and they want to know what we are looking for in bookkeeping. So this is just kind of a fundamentals video. So when we look at bookkeeping, really when we do bookkeeping, we're looking for bookkeeping to be done in accordance to IRS regulations. So there's really two reasons why we do bookkeeping. One is because it gives us historical financial information to make informed managerial decisions about our business based on finances, right? So that falls under a different set of rules than other things. For example, when you want to make informed financial decisions, you're going to want the information to be categorized in a certain way that means the most to you. For example, fuel expense recorded as office supplies is not going to provide you any benefit. You want it recorded either as car and truck expenses or as fuel expense or something like that. So that will have more benefit to you. However, the second reason why we keep accounting records is because some higher power tells us we have to. And for most of us, that's taxes. It might, so the IRS, or it might be like a bank if you're trying to get approved for a loan or something. So there's going to be different sets of rules based on who's telling you to keep the books. So for IRS tax purposes, the stance isn't so much how is something categorized, more about is it an expense or is it revenue or is it something not taxable? And so we categorize it that way. So for, like I was using that fuel as an example, if we categorize fuel as auto expenses, car and truck expenses, it will be beneficial to you because you'll know what that means. But the IRS doesn't really care if I put it as car and truck expenses or office supplies, because at the end of the day, it's still an expense. It still lowers your taxable profit. And by making it a different category, it's not going to change anything. Now, in an audit, the agent might look at me and go, "Why are you stupid? Everybody knows that fuel should be under auto expenses or car and truck expenses. Why do you have it in office supplies?" And I'll say, "Oops, sorry, misclassification doesn't really matter." And we move on with life. That's if they even ask about it, right? Because ultimately, they can't penalize us because it was misclassified. It's an expense. It lowers the bottom line. It's not going to affect the audit. It's not going to affect your taxes any differently. So no penalties because it was misclassified. So when we do bookkeeping, we categorize everything based on how we want to see it in taxes. And typically, the less information we give the IRS, the better. As long as they get the whole picture, we don't want to give them nitpicky details. So we lump things together as much as possible. For example, you might have hired contractors under and categorize their expense, their fees under different things. For example, like if you hire a contractor to repair something, you're going to probably categorize that under repairs. If you hire a contractor to be a fitness coach, you might classify that under coaching expenses. Or if you hire a contractor such as a CPA to be your CFO or something, or a financial planner, you might categorize that under legal and professional fees. Or you might break it out even more. You might have like business contractors that are coaches, that are marketing, that are website design, and that are administrative help. And you might break that out by contractors that are coaches, marketing and advertising, designing websites, and general and administrative contractors. You might break it out like that, but on the tax return, we're lumping that all together. We're just going to call it contractors' fees. We don't need to tell the IRS what the contractor does. We just want to tell them we have contractor expenses. So you might have a list of categories that is 30 or 40, and we're going to take that list of 30 or 40 and we're going to try to get it into about 10. so that we give the IRS less information. It's not going to change your taxes. It's not going to change anything. So really what we're looking for in bookkeeping isn't how things are classified per se, just that they are classified either as an expense or as income, or if they belong on the balance sheet because it's a transfer between bank accounts or payment on a credit card, non-taxable transactions. Now, I will say there is one caveat there, and that's called meals, like taking somebody out to eat. So the IRS does limit meals to 50%. So let's say you take your buddy out to eat, you're gonna charge it as a business meal, and it was $100. Well, on the tax return, we only get to deduct $50 of that. But in your bookkeeping, you're still going to record 100% of it because it's in the tax return where it's limited in the tax preparation. So that is the only category where I want you to make sure that the expenses actually are categorized correctly. We want meals to be categorized as meals. Now, what we really are looking for is bank reconciliations. That's really the bread and butter of accounting records, is the bank reconciliation. So I don't care if everything is misclassified. Like, we will go through your books in detail to make changes. For example, you might have revenue recorded as an expense or an expense recorded as revenue. You might have pet supplies, something completely personal, as a business expense. Now we're going to make changes on things that are misclassified as we do the bank or the tax return preparation. But it is the bank reconciliation function that is the bread and butter, the backbone of the accounting records, the bookkeeping, that proves that 100% of what went through your bank account or your credit card account actually is indeed recorded. So that's what we're really looking for. We want to see if those reconciliations are completed. Because that is the proof that we're able to, that 100% is recorded in the books. We don't have any duplicate transactions and we're not missing anything. That's what we're looking for. So really, when it comes down to it, the books, the most important function is the bank reconciliation. I don't care how things are classified. I do hope you classifying the best way that makes the most sense for you so that you can glean some information from these things. But ultimately, for tax purposes, we don't care how it's classified. And if there are some misclassifications, we'll correct it in the tax return preparation process. But I do want to throw up one thing. So I have this bookmarked for me. I'm going to share it with you in a screen share here. So let me bring it over here. But this is an article that I use that I found. Delete the pop-ups. Okay, let me go ahead and share screen here. Just kind of show you what common, so this is an article, 36 business expense categories for small businesses and startups. This is just basically a very down and dirty article about some common categorizations for business expenses. We've got advertising, continuing ed, credit and collection fees, basically bank fees or credit card fees, dues and subscriptions, employee benefits, insurance, maintenance and repairs, legal, professional, office, telephone. I mean, there's 36 of them. I'm not going to read them all to you, but if you want to know, just Google it and you can come up with a list. Or if you want this link, I'll send it to you in an email. But basically, I mean, these are just 36 common things to help you better understand your financial statements because you've categorized them into these categories. But then you send this to us, and now we're going to try to combine some of these together. For example, we would like this credit card and collection fees or bank fees. There's a good chance we're going to combine that into one category on the tax return as just bank and merchant fees or something like that. Because there's no point in having these separated, especially when like bank fees might be a couple $100 for the year and credit card collection fees might be a couple $100. So, just things to consider. But I really don't care. This is a completely open to how you interpret things, and it's not going to change your tax return anyway. So anyway, that's kind of the video topic for today. Just down and dirty about what we expect in bookkeeping. Really, like I said, I want to see bank reconciliations. That's really it. That's what we would hold up. What would hold up in an audit. That's what we want to see for tax return preparation. Everything else, it's open to change, open to adjustments, it's easy. And ultimately, as long as you, like, even if you miscategorize going out to eat, we're gonna find it and put it into the correct category for the tax return preparation. That's what we do as part of the preparation process. Okay, hopefully I was able to keep that under the time frame until next week. Best of luck in your business endeavors.